Axis Bank and Diamond Bank shares have continued to rally on the Nigerian Stock Exchange. Well, let's cross over now to the exchange for update on that and more from Temple Ashaju. Hello, Temple. Good afternoon. So what is the market's latest reaction to the Axis and Diamond Bank merger and acquisition?
I think that sentiment towards the two companies is rather receding right now because Axis Bank, which is the bank acquiring Diamond Bank, is currently down some 2.76% on the ticker tape of the NSE, where we can see the numbers scrolling, and of course on the board you probably can see behind me here. And in terms of the movement on Diamond Bank, we've seen just some 0.10% gain on that particular company as things are right now. They are not the most actively traded companies, but we know that they have enjoyed some kind of share price movement within the last 24 to 48 hours here in this market. However, their prices are still very good. Axis Bank, for example, is still around 8 naira trading, and Diamond Bank is 1 naira 14 kobo. But generally, if you look at the banking sector, that segment is up, looking good right now. It's been green all day. If we don't see any major change or sell down in some of the major tier 1 names in that segment of the market, then that segment should close positive today. But if you look at the top trades chart, we've got the financial services sector driving that performance as well. Mansard had done some 40 million units of shares in early trades, but then it was overtaken by Zenith Bank, which currently stands at the most actively traded, having seen some 87 million units of shares transactions on that particular counter right now. Generally, the market is up 0.10%. You've got some more than 250 million units of shares, traded, valued at about 400 or 4 billion or thereabout, 3.92 billion naira a few minutes ago when we last checked. However, there are a couple of stories or news in the market. We've got CCNN as a company that released its Q3 2018 unaudited results, posted some very wonderful, impressive numbers there. Profit after tax is up some 96.9%. The PBT is also above 100% in terms of performance, while the revenue is around 43.58%. The market has reacted to that because that company has been gaining 9.91% in terms of the gain that is recorded. Forte Oil, which is an energy marketing firm, is up some 9.91% as well. And we have 11 PLC also on the gainers chart. In terms of other news, you got Maya PLC doing some board meeting today, made that available to the NSE, and S.Africa also recently posted its rights issue, given a qualification date of 4th of December this year, 2018, and it's raising some, I think some more than 80 billion naira by way of rights issue, some 7.43 billion ordinary shares of 50 kobo offered at 12 naira to investors, and we've really seen some 23 million units of its shares traded so far as the market trade is ongoing today in the markets. Chimeze.
All right, thank you very much for your time there, Temple. And South Africa's Nedbank shares fell by more than 4% today after a newspaper report that Nigeria's financial regulator had launched a probe into its West African associate, Ecobank. Nedbank, which is one of South Africa's 4 largest lenders, holds a 21% stake in Ecobank, and its relationship with a Togo-based lender was just starting to pay off after years of disappointment. The Sunday Times reported that the Financial Reporting Council of Nigeria had confirmed an investigation into Ecobank, which returned to profit in 2017 after losing $131.3 million before tax the year before. Ecobank's Nigerian business had been under pressure due to a slide in commodity prices and currency swings, but it has helped boost Nedbank's performance in 2018 so far. Also today, Nedbank repurchased 7.1 million shares from minority shareholders worth 1.41% of its issued share capital for 1.95 billion rand. And it's Christmas season, and refugees living in Uganda hold annual refugee Christmas market where they sell and exhibit a variety of art, crafts, jewelry, and foodstuff produced in various refugee vocational training programs. Our refugees living in Uganda got a chance recently to showcase and sell their products at the second Christmas refugee market, which held in the capital, Kampala.
The refugees who come from different camps in and around the capital have all participated in various vocational training programs that taught them skills like basket weaving, jewelry making, and furniture design. The three-day event targeted Christmas shoppers just ahead of the holiday season, encouraging them to support the refugees and avoid the last-minute rush.
Really nice things. Even I just bought the cheese from Congo. It's very nice. You don't see it here normally. So. And nice materials and fabrics and all different kinds.
Uganda hosts more than 1 million refugees who have fled South Sudan, Democratic Republic of Congo, and other countries. Refugees here are encouraged to start businesses and pursue self-reliance.
First of all, it's promoting me so that I can get some little money to spend my Christmas. That is the biggest issue. Because if I was back in the village, no one would see what I'm making right now. Yeah, but I've come here, I've made some money. It's helping me really.
When I sell my art this, I will be happy. I will buy the shoes for my children, my wife, because I have a big family there. I have 5 children and a wife.
The fair was organized by UNHCR and its local partners. The organizers hope that the market will improve relationships between refugees and their host communities.
We really hope we can do this every year, and if possible, do it also in the settlements, bring it closer to the communities that host the refugees in the settlements. If we are able, and we will try, also have another market maybe during the year, around Easter. So we hope that it's something that will continue.
Uganda is praised for its open-entry refugee policy that grants aliens free movement within the country, access to public health services, and small plots of land for settlement and cultivation.
And finally on the show, the International Monetary Fund has approved financing of about $2.97 billion in the form of a precautionary and liquidity line to help Morocco ward off external economic shocks. The two-year arrangement will help lower the ratio of public debt to GDP over the medium term while securing priority investment and social spending. Morocco's treasury debt to GDP ratio for 2019 is expected to rise to 67.1% in 2019, up from 66.7% in 2018 and 65.1% in 2017. And that's it on the program. Thank you very much for watching. I'm Chimizi Obi Iwabu.